Chris, you hear Donovan?
Yeah.
That's you. That's how you are. All right. Good morning, everybody. Welcome to Early Morning Crypto Talk. Bitcoin Brandon here from Los Angeles, California. Saturday morning, it's going to be a rainy weekend here in Cali. We get ready to see our local Los Angeles Rams advance in the playoffs. My wife wants to see if the Eagles are going to advance tomorrow. We'll see. Go ahead and type in the chat box where you are listening in from. Make sure you hit the thumbs up button on the YouTube channel as well. First up is Bouger, Dallas, Texas. Court Gomes, Port St. Lucie, Florida. Shane West from Chicago. Tony Pinkston from Philly. Rohan from the ATL. Lorna Vasquez. Moshe Frazier. Bethany Gibbs, Seattle. Stan Williams, Tampa, Florida. Good morning, good morning. Mr. Stewart from New York. As a disclaimer, I am not a licensed financial advisor to be giving financial advice. I read the news, give my opinion, share suggestions, and it is up to you to make an informed, intelligent decision on which direction you want to move into. And as Stan, yeah, Cowboys. I'm sorry, Dallas. Bouger, Desai. But the Rams are going to kind of run through you today. Looking forward to seeing that later on. I want to see it. I want to see the Rams going up against the Eagles again. Payback. But they got to win first. There's 4 rules I live by in the crypto space to have success. Rule number 1, education is key. Education is everything. Rule number 2, never invest money you cannot afford to lose. Rule number 3, where do you see yourself? Always get your money back as fast as possible. And rule number 4, where do you see yourself in 3 months, 6 months, a year from now? What are you willing to do to make that happen? Pick a vehicle or vehicles, I don't care which. This is in crypto, you can do multiple things. Just stay focused on what you're doing. Don't get caught in the trap and getting distracted. There's so many things out there. Can be a part of everything. Now, following these rules is not going to guarantee you success, but it will at least minimize your risk. And that, ladies and gentlemen, is the most that we can ask for. So let me turn on screen share. Again, I got to say, you know, I haven't been talking about it much, but I am highly impressed with my crypto phone. Been using it for now more than a month, and now I've switched to using this for whenever I do my calls now. Like I'm on it right now. No drop calls, moves faster than everything else. Excited for the future for this stuff. Crypto phones, wow. All right, first things up, let's look at the market cap. We know the last 48 hours, the market took a drop of at least $400 in the crypto space. Let's go back, refresh. So total market cap, 122 billion. That looks like it's kind of been flat. Bitcoin dominance, 52.4%. The altcoins have been losing more money right now. We've got Bitcoin almost flat. Ripple down almost 2%. Ethereum 1.5% down. Bitcoin Cash is in the green temporarily. The top 24 top producers: Hypercash, Polymath, Bitcoin SV is up 10%. What's going on there? 10.54%. Qtum, any other coins? Bitcoin Cash, 1.78%. So some people made some good money off that Bitcoin SV if you were able to spot that. Worst performers. Tron seems to be bouncing, and because this chart's bouncing all over the place. Negative 9% down. Verge, 2 porn coins are down. Mobile Gold, Dentacoin, Pundi X, negative 4%. Litecoin, Cardano. All right, let's look at some articles. Is Bitcoin price heading to low 3,000? I say yes. Good morning, Antoinette, Linda, Handy. I say yes. In fact, I think that before we ever see any type of major bounce, Bitcoin might hit $2,500. That's just my opinion. I don't want it to, but I'm not going to be upset if it does, because I know the process. Only thing I'm upset is I wasn't paying attention and I didn't put my coins in Tether, and I got my coins sitting at the 39.80 price right now. So I can sell for a loss, or I can just sit tight on it, which is impacting me doing my day trading. Right now, the price is at 35.86. I sell, I'm taking a 300-point loss. So I'm just going to sit on it, and we'll see what happens. It might take a week or so. So is Bitcoin price headed to 3,000? Let me put this link in the box for you guys. And I'm telling you, one of the greatest skills you can learn in crypto is the ability to read the charts, the ability to read CoinMarketCap and to read the exchanges. That's one of your biggest skills to learn. On January 11th, the crypto market experienced an intense sell-off as the Bitcoin price dropped below the $3,600 mark, and major digital assets recorded drops in the range of 10 and 15%. Following a drop in the price of BTC from 4,000 to 3,500, traders expected the dominant cryptocurrency to fall below key support levels in the 3,000 region. Well, what is the support level looking at right now? We've got the bottom wall about 35.22, 35.11. The support wall on the other side is at 36.62. It could bounce around in there. And again, why I said this is an important skill set to be able to read this is even though the market has been doing a steady downward trend, if I pull this back on the month, see this down there, boom, going all the way back to December, boom. It did have a little bit of rise from December 14th all the way up to the 24th. Then it dropped, corrected, bounced, came back up, down, came back up, now down, down, down. I still doubled the amount of coins I made or I've been trading with last month. So even in a bad market, I doubled my money. That's why education is important. Crypto winter is not over. In mid-December prior to Christmas Eve, many investors in the crypto market demonstrated renewed optimism toward a short-term trend reversal of Bitcoin and other major cryptos due to the very strong recovery from a 12-month low at 3,100. Yeah, it got all the way up to 4,100. From December 17th to December 20th, the price increased from 3,100 to 4,100 by more than 31% within a 3-day span. We made a lot of money during that time. I think I made 18% that week. But at the time, an FX hedge fund CEO, Su Zhu, said that buy walls on leading fiat to crypto exchanges in the likes of Coinbase and Bitstamp started to build up in the 3,200 to the 3,300 range, and investors began accumulating the asset at a low price range. He said on December 13th, 10% down from here. 3,300 buy walls on Coinbase are now the largest in BTC notional since mid-2015, similar to Bitstamp. To break lower will require filling these fiat-backed bids, either one, and more BTC borrow to come online. So in layman's terms, what they're saying there is you can kind of tell where the bottom is by looking at this buy wall. So for it to go lower, you need to have a whole lot more sells than buys for it to get lower than this. So the buy wall right now is hitting right at the big one, 3,300. And then you'll start seeing it bounce back again. Let's see here. Clean break of support. If we do retest 3,700 on the weekend, which is now, and don't manage to close above there, I'm expecting 3,350. So based on this guy, remember what we say, buy low, sell high. So right now, the price is 35.89. You might be able to buy a little bit right now and then watch the market go right back up. It's going to hit, see if it can get past 3,700 and then sell. Put a sell order in or below that, like 36.80 or something. You're going to make a good profit there. And then buy back in when it comes all the way back down to 33.50. Expect low liquidity asset to underperform. As Bitcoin dropped by more than 10% in a 48-hour period, Ethereum, Bitcoin Cash, and other major cryptos recorded 15% price falls against the US dollar. Ethereum, which was expected to maintain a positive upward price movement in anticipation of its Constantinople hard fork, on January 14th was overtaken by Ripple. Although the daily volume of Bitcoin and Ethereum still remain relatively high, the volume of the crypto market is hovering at 15 billion, down 7 billion since January 10th. All right, interesting news. Good to know. Let's see what else. Wall Street Tom Lee predicts S&P rally in 2019. Let me put this in the chat box. Hello, Coach Sean, the voice, Robinson. I like that talk you did earlier, Sean. Especially that term you used. You talk about relational chemistry. I haven't heard of that one before. Relational chemistry, or in that context. What really stuck out when you talked about knowing your leader's weaknesses. For those of you who think that I'm a leader, I am flawed. I am very, very flawed. I am not right all the time. There's things about me that people don't like, and I am not out there trying to please everybody either. But know your leader's flaws. And if you choose a leader to follow, and you want to be ride and die, and you believe in the same goal plan, and you know what your leader's flaws are, you know what makes a better team is those individuals that are able to fill in those gaps. Fill in the gaps. Make it whole. Become strong in one place where your leader is not strong in. Yeah, in that aspect, everybody wins. I like how Sean the Voice said that, because he's absolutely right. I heard that before, kind of from Holton Buggs, when he talked about building a team around him, and he had to let go of people who focused only on his flaws rather than helping to fill in where he lacks. Because that was a big, major lesson. I need to remember that. Wall Street strategist Tom Lee predicts S&P rally in 2019. All right. Tom Lee believes the massive sell-off in equities recorded in the U.S. financial markets within the fourth quarter of 2018 is nothing more than a midlife crisis, laying the groundwork for even larger gains in the financial market. Speaking in an interview with CNBC's Fast Money halftime report, Lee noted that U.S. stocks are well on the way for double-digit increases in 2019, and that they might go as high as 17% this year. Now, we've heard from Jamie Dimon. We've heard from that one guy yesterday from Morgan Stanley. These guys are all over the place with this. So he's saying the stock market's going to rally when everybody's talking about it's about to go into a recession. Who do we listen to? Let's keep hearing what he has to say about this. The buy the dip, which people thought died last year, is back. The probability of a double-digit year, we think, is the highest since 2009. You know what else I find interesting? Is that all the experts that's talking on this, they're either, it's like politics, they're either the far, far right or the far, far left. I'm not seeing nothing in the middle. Either the stock market's going to have record years, double digits, biggest since 2009, or I'm hearing the country's about to go to a recession bigger than the Great Depression. Either or. I'm not hearing nothing in the middle. And I don't understand why that is. Why are they on so far ends of the spectrum? Friday's investor notes. He noted a similar sentiment in his investor note released on Friday morning, where he predicted that 2019 would see the S&P index rise by 13% from its finishing point in 2018. An increase which will mark a finishing point of 2,835. He argued that the major catalyst behind this increase, what is that? Will be a consistent expansion in profits. Where are these profits coming from? We've got the trade war going on right now that's impacting everybody. We've got the government shutdown. We've got the devaluation of the dollar. We've got China and Russia dumping the dollar treasury and buying gold and crypto. We've got Russia that just made a statement they're about to put $10 billion, buy $10 billion worth of Bitcoin so that they don't have to use the dollar as the world's reserve currency. So Russia's buying gold and Bitcoin. $21 trillion in debt is the U.S. economy. Where's this bull run coming from? Interest rates rising from the Fed. So Lee, who serves as both the co-founder and head of research of Fundstrat Global, predicted an increase in earnings of $169 per share in 2019 and a further increase to $183 in 2020. He's talking about the complete opposite. Stock predictions. Lee's note contained a bullish outlook on FANG stocks. I just did an article a couple of days ago that showed the opposite of the FANG stock. That is, stocks belonging to Facebook, Amazon, Netflix, and Alphabet, claiming that these shares often do well in odd number years. The Wall Street strategist said he sees a possibility for the market to be determined by the actions of some key demographics. starting with millennials. Lee claims this demographic is responsible for driving well over 50% of GDP growth and that their actions are more likely to affect companies such as Square, PayPal, and Tesla. Lee also put his weight behind stocks of companies that are reportedly championing the course of artificial intelligence and automation. I agree with that, with names such as Dollar General, Amazon, Nvidia, among others, being singled out by the analysts. I don't know what to think on this, because everything he's saying, he hasn't shown any evidence as to why. I see plenty of evidence as to why what he's saying is not going to happen. But I'm going to pay attention to this even more closely. I mean, we are really in uncharted waters right now. We don't know how long this government shutdown is going to last. We've never in the history of America have been shut down this long before. So we don't know what the domino effect is going to be. The more people that are not able to pay their rent and mortgages, the more government services that are not able to come online. All government assistance program money runs out at the end of February. So even though yesterday marked the day where federal employees didn't get their checks, people that are not employed by the government, people that work regular jobs, but they're not making enough money, so they're still on government assistance. Oh yeah, you can still work and be on government assistance because you're not making enough money. That all runs out at the end of February. There's not going to be tax returns coming in that everybody's waiting for. It's a domino effect that's going to take place. How is that going to affect the economy that's already in red alert right now? I'm not trying to be all doom and gloom. I look at where we are and make adjustments to deal with it. My adjustments? Everything crypto. Involved in things where your money's making money for you. Things that you can actually control. I hate with a passion being in situations where I don't have control. But I had to learn to let go. That's when I had my first big break. The day I learned to let go and only focus on the things I do have control on. It's brought my stress level down, have a more enjoyable life, and been more productive. There's just some things you can't control. All right, last article up. Federal Reserve blames altcoins for dragging the Bitcoin price. Okay, that's just this sentence here. I have questions. Number one, why is the Federal Reserve talking about Bitcoin? One, why are they even mentioning altcoins? And why do they care about the price of Bitcoin coming down? Shouldn't that be in their favor? What does the Federal Reserve have to do with anything as far as crypto? They see it as a threat. So this caught my attention. So let's read this article here. The Federal Reserve Bank of St. Louis has released, is that how you say it? St. Louis or St. Louis? I never got that right. The Federal Reserve Bank of St. Louis has released an article today about Bitcoin. In it, the bank notes that the price of Bitcoin has three potential futures: indefinite, infinite appreciation, zero, or somewhere in between. They believe it will be somewhere in between. The authors, David Endelfato and Andrew Stuak, conclude that one of the factors dragging down the price of Bitcoin is an ever-expanding supply of alternatives. What do you mean? You're talking about the altcoins? The altcoins is not dragging down the price of Bitcoin. See, someone who doesn't understand crypto would say something like this. Bitcoin is an inherently speculative and volatile asset, okay? A fixed supply doesn't mean an ever-increasing value. Demand determines value after all, that's true. Other tokens are frequently launched, which have properties attractive to a portion of the market. If Bitcoin was still the only crypto, something which was only the case for a very brief time in its history, this money would probably go into Bitcoin. Stop right there. You know why this is false? Look at the Forex market. That's like saying, oh, well, if there were no other money out there, then U.S. dollar trading would be higher because it will be the only one. Really? That's like saying, okay, I got to break it down even more. I remember a friend of mine. There was a girl I liked in high school, and I went to an all-boys school, all-boy Catholic school. And the only time we saw girls, especially in our early, because we're freshmen, sophomore, we didn't have cars, so we couldn't drive to the public schools. So the only time we saw girls during school time was when the cheerleaders from our sister schools came to practice, or summer school. And I remember there was only 3 girls in our summer school class. Now, I got to watch what I say here because I don't want somebody to be offended. They weren't the best looking girls, but there was only 3. So as a result, to us, they were the best looking women we have ever seen. And they got all of our attention. I remember one of the upperclassmen, when they were looking at us, gawking over these girls, they were like, what the hell's wrong with y'all? You just have lack of choice. However, the flip side, and that doesn't mean the girls were ugly. That's not what I'm saying here. Everybody's beautiful on the inside. But when you have a gorgeous woman, she's gorgeous whether she's in a room by herself or she's in a room with 100 other women. She's still going to be gorgeous. Bitcoin will be valuable regardless of how many altcoins are out there. People are not saying, I'm not buying Bitcoin because I'm buying these other coins. People that are buying other altcoins still have the same strategy when it comes to buying Bitcoin. I mean, this is elementary what they're saying here. Doesn't make any sense. But I digress. Let me continue. If Bitcoin was still the only crypto, something which was only the case for a brief time in its history, this money would probably go into Bitcoin. Okay, well, if that's the case, 2010 to 2014, Bitcoin should have been $20,000 a coin. How did it get to $20,000 a coin when there was already 1,000 coins on the market when it did? Let's not beat around the bush. The real problem is market manipulation right now. That's why the price of Bitcoin and all the cryptos are where it's at. Because when Bitcoin rises, all coins rise with it. And Bitcoin traditionally has always stayed at around the 50% level. When Bitcoin was at not Bitcoin itself. Was at the $19,000 mark. Do you know what its dominance was? Bitcoin's dominance was around 38%. So if what this guy is saying is true, how could the dominance of Bitcoin reach almost $19,000 a coin and it only have 38% dominance? So it doesn't matter what the other coins do. That's not going to stop this. Bitcoin's dominance right now is 52% of the price is at 3,500 right now? 35 something, 3,600, 3,661. And it has half the coins. So wait till I get on panelists and stages and I got to debate with some people. I'm going to love it. I got to watch my mouth though. I don't want to hurt somebody. All right, let's continue. See if he says anything relevant here. Bitcoin maximalists ignore important realities. So are you considering me a Bitcoin maximalist? What reality am I ignoring? He says, we argue that Bitcoin will simply usurp any improvements by other tokens that has never come to fruition. There are even fewer dApps and users of dApps via Bitcoin's blockchain than much later entrants like Tron. So the Federal Reserve wrote, Consider the following thought experiment. A restaurant selling meals for $10 will happily accept payment in the form of one Hamilton bill or two Lincoln bills. That is, the nominal exchange rate between Hamilton and Lincoln bills is 2-to-1. Now, suppose that the supply of Lincoln bills is increased, but the supply of Hamilton bills remains the same. The exchange rate remains unaffected. That is, the increase in the supply of Lincoln bills has led to a decline in the purchasing power of both Lincoln bills and Hamilton bills, even though the supply of Hamilton bills has remained fixed. Might an expansion in the supply of altcoin have a similar depressing effect on the price of Bitcoin? No, because you are using an experiment and I am using fact. December 2017, over 1,000 crypto coins on the market. Bitcoin went from $5,000 to almost $20,000 a coin with the introduction of new coins on the market. How do you explain that? How do you explain that if you're using your example here? It doesn't add up. It doesn't matter at the end of the day. That's like saying, have you ever, I want to purchase my Bitcoin mobile, right? And in San Dimas, where the car dealership is, you've got Honda, you've got Toyota, you've got Lexus, you had Nissan, Chevy. They're all like on the same block, right across the street from each other. So by his logic, if I remove all of the other car dealerships and only leave one, therefore that one car dealership that's there should have increased sales, according to this argument. Yet, how are these car dealerships remaining open with all that competition right there? Here's another factor that the Federal Reserve is not missing. Competition is good. Competition forces a company to improve their business model, their customer service, their product, and it brings down the price for us consumers. If you have a monopoly, you have a crappy product, and it's going to be more expensive. Yeah, I am crapping all over this dude right now. This makes no freaking sense. But they are an economist for the Federal Reserve. And you guys can agree to disagree with me. Let me know. You're listening to this. Am I wrong on this? Am I missing something? Do you agree with what this economist is saying? Does this example make sense? The Hamilton bill and the Lincoln bill? There are other complicating factors to the price of Bitcoin. On the one hand, it is the cryptocurrency with superior liquidity. This makes it the on-ramp and off-ramp for many other cryptos. Does anyone remember when ICOs were primarily conducted for Bitcoin? Nowadays, Ethereum performs that function. Yeah, and importantly, ICOs fueled demand for Ethereum through 2017 and 2018. Ethereum has a large supply and may never stop producing new units. Therefore, its lower value makes sense. The more available something is, the less value it is. For fiat money. I bet these people never bought Bitcoin in their life. They don't have any skin in the game. The article also speaks to intrinsic value. Consider now the bearish case for Bitcoin. This outlook is based on the view that Bitcoin has no fundamental value and that sooner or later the market will recognize this fact. Okay, so that is something you would hear from a bank. That Bitcoin has no fundamental value and sooner or later the market will recognize this. Really? Airbnb owns no property. Uber owns no vehicles. What's the value of it? So they're saying Bitcoin has no intrinsic value. That's why it's bearish. No, it's because of market manipulation. That's why. In our view, one can accept that Bitcoin trades above its fundamental value without claiming that its fundamental value is zero. In fact, many securities trade above what might be considered their fundamental value. Gold, for example, trades above its value as measured by its industrial applications. And based on that alone, you should negate the first thing you said. Why is it trading above its value? Because the people say it has value. And at the end of the day, that's all that matters. If the people believe in it, it has value. Isn't that what George Bush said after 2008? And he did his State of the Address, emergency. The only thing propping the U.S. economy up is the people's value and faith in it. And we can't lose faith for our sake. You think the Federal Reserve would know that more than ever because where's the gold at, Fed Reserve? Open up Fort Knox. Let's look in there. Hasn't been opened up in, 60 years to the public? As noted before, Bitcoin's actual utility is a secure digital store of value and transfer of the same. Other blockchains have taken and dominated the blockchain aspect of cryptocurrency. Despite the global chaos, demand for cryptographically secure payment systems isn't necessarily popping. Yeah, that's like saying, yeah, the internet in 1993 got this thing called email, but there really is no demand for email because people still want to use the mailing system. It's trusted and reliable. I don't see this email thing going anywhere. Like Blockbuster Video. What do you mean you want to put videos in somebody's mailbox? And it's going to take them 3 days to get their video. People don't want to do that. They want to get off work on their way home. They want to come in, walk up and down the aisles, pick out their favorite movie, maybe call in ahead of time and put their movie on reserve, get some Twizzlers and popcorn while they're at it, and go home on Friday night and watch movies instantly. They don't want to wait for it to come in the mail. No, we're not going to, but no, we don't want 49% of Netflix. That's not going nowhere. That's what people are saying, or the critics are saying where Bitcoin is right now. Other blockchains have taken and dominated the blockchain aspect of crypto, despite the global chaos, blah, 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 blah. Let's see. Such things will generate demand for tokens that underpin those blockchains. Tokens like Ethereum, Tron, Neo, Ale have a long-term technical proposition that Bitcoin has long been lagging on. So, Google came after Yahoo. Yeah, Yahoo's still there. Bitcoin as a smart contract platform is probably a dream at this point. First of all, Bitcoin wasn't designed to be a smart contract platform. What are you talking about? You can always tell when somebody that's talking about a subject is not educated on the matter they're speaking on. But you have to be educated first to be able to recognize that. Bitcoin was not designed as a smart contract platform. Ethereum was. For another, at this point, other platforms simply do it better. The trend of alternatives taking up more and more of the total cryptocurrency market cap is likely to continue. So, Bitcoin maximalists rest on flawed arguments such as network effect. These arguments conveniently ignore historical examples where superior technology and marketing overtook dominant networks. Depends on the industry. That's not universal. Bitcoin is likely not to trend downwards towards zero. We both agree. The economists acknowledge this as well, but the odds are that an increasing amount of crypto market cap will enter through and be invested in alternatives and growing demand based on their usefulness. Yes and no. Because right now, there's only a small amount of coins on the market that actually have real world use. People ask me, Brandon, what coins are you focusing on in 2019? I am only focusing on projects that I see that will have a real world use. Like Green, like PoonDX, like Tron or Verge, like what's the other one? Mobile Link. And I'm not saying you guys need to invest in any of this stuff. I'm just naming coins that I know already have a real world use to it. Besides, yeah, we're just going to create an idea and throw up a coin out there and raise some money. It's got proof behind it. Proof of work, proof of power, not just proof of stake. Most of the coins out there will be gone once people realize, oh, this is not going to go anywhere much. That's like the .com. There's going to be another painful. It's like a birth, like Bitcoin or crypto going through a moth transformation from a larva to a butterfly. The internet did that. Amazon at one point lost 90% of its value. Apple lost 95% of its value at one point. Written off as dead and gone. After 10 years, Bitcoin remains more a speculative asset and store of value than anything. That's right. The trend the Federal Reserve economists identify is representative of that. There are numerous factors that go into an actual downturn in the price of Bitcoin. A good percentage of holders will not sell at a loss. That's true. That are educated. You know what? That is not true. A good percentage of holders. That's not true. A lot of these holders are brand new people. They came into the space in 2016 into 2017 because the price of Bitcoin was rising. So they bought in anywhere between $7,000 to $3,000. And most of them are not educated on this space. They all have a number. If Bitcoin drops to a certain number, they're going to freak out and they're going to sell. That's most of them. So I don't agree with that last statement there. A good percentage will not sell. Yeah, they're going to sell. And who's going to buy it up? Who's in position? The institutions, the billionaires and millionaires are buying it all up. These people hold the coin's price at a certain level, but active trading can eventually reduce the price without regard to these people's philosophical or strategic holding patterns. Bitcoin and all other cryptos very much remain in a price discovery phase. Some believe Bitcoin was overbought in the hype bubble of 2017, which inherently raised the price of nearly every other crypto available. Others believe it was just a fluke. Institutional money is still only just entering the picture. The utility of Bitcoin is only one aspect of its value, but it will play an increasingly important role as others develop more advanced and attractive feature sets. You know what? Let me finish this. I'm going to show you one thing that's going to blow this whole thing out the water. As the Federal Reserve economist said, we think the future path is more likely to remain bounded between these two extremes. Zero, no. Endless incline without significant change on the demand climate, certainly not. Look out, Bitcoin. The 2000s called and they want their basic crypto design back. The era of smart contracts is dawning. Whoever does it best will see the most demand. It's probably that simple. Wrong. False. It is not one or nothing in this space. The entire network marketing space is sharing $40 billion market. Think of all the people who have become wealthy, all the businesses that have changed lives. 50% of that market is health and wellness. You have people making $1 million a month in coffee, and there's multiple coffee companies. And it's been going on since the 50s. What do you think is going to happen in the crypto market? Because it's already 3 times the size of network marketing. And here is what's going to blow that out the water. Just looking at this graph. Let me show you something here. And I'm going to be including this. It was requested. Bethany brought this up. And I'm going to include it in the Bitcoin boot camps. This is Bitcoin. All Bitcoin represents this, 100 billion. That's not even 100 billion. It's actually 60 billion now. But this is a $100 billion block. You see this? Each block, 100 billion. This is just the derivatives of the institutional investors, the amount of money they have in the world. The low end is 544 trillion. That's this. 544 trillion. You know what the high end is? Where is it at? 1.2 quadrillion. When was the last time you ever saw that number? 1.2 quadrillion is the institutional worldwide money. That's crypto. What if? See, here's something Holton Bug said when he was in his company deal. I only need 1% of the market. What if Bitcoin just got 1% of this? I'm not talking about the whole crypto market cap, just Bitcoin. Got 1% of this. Current market cap of Bitcoin, 64 billion. What if it was 6 trillion? Just Bitcoin. 6 trillion. That is nothing. Even 6 trillion is a blip on the radar screen of 1.2 quadrillion. Watch who you're listening to. The uneducated would read an article like this. Oh, it's the Federal Reserve. He's an economist. He must be right. Watch who you're listening to. You need your own education so that you're going to be able to sift through the BS. Because their goal is not to help you become financially stable. Their goal is to make sure that you are constantly dependent on the system for survival. The moment you become independent, you don't need them anymore. Their business model goes dead. Always look at what is their agenda, what is their intent, before you listen to anything that's about to come out their mouth. How do you do this? Education. Financial education. I have learned more about money and how money works over the last year and a half than in my entire life. And I have a college degree and almost a master's degree. I walked off my job years ago. I became financial independent years ago. But I've learned more now than ever in my entire life. That's going to take to the next level. Education. Spend the $300 to get KGX education. It's priceless. And then share it with others that you know that need it. Like my brother who said that the US dollar ain't going nowhere because it's backed by gold. And I'm like, he turns 41 next month. Born in 1978, I said, Devin, you realize that the dollar hasn't been backed by gold since 1971. It has never been backed by gold in your entire life. And he has a college degree and runs his own business and didn't know that. Cynthia, I don't know your question. I've gone to Visual Capitalist and couldn't find these comparisons. Let me put the link of this article in the chat box. This visualization. I hope this can help you. It should work. There you go. So with that, thank you, ladies and gentlemen, for listening. There will not be a training today. KGX training. There's no training today. You can listen to the one from last week. I also forgot about this because people always ask me, where can I get the recordings from? Well, one, anything that I do with the Zooms is on my YouTube channel, so subscribe and just go back. But another is that's my brother. The other is you go to our KGX community group, especially for those of you that want to see any when we do recordings just for members only and you're not able to make it. just go to the members group, click on videos, and any Facebook Live that's done in the community group, they're all here. So the article that I just showed you, I did a private meeting on it, a presentation on it, and it's here. So all of them are here, like the ones that me and Jairus did as well, trading, how to trade. They're all here, so you can always go back. What is this? This I'm in a hotel room somewhere. I don't know what city that is, but I think they did a Facebook Live there. I don't know if that's Philly or Chicago or what. So all the videos are here in the group. All right, so that is it, ladies and gentlemen. Thank you for listening. I may be back for a late night crypto talk tonight. Oh, no, I'm not. I'm going to be watching the Rams beat up on the Dallas Cowboys. So there's not going to be crypto talk tonight unless there is some major news and development that take place. See you all tomorrow morning, early morning crypto talk. Bitcoin Brandon out. Have a great day. Bye-bye.